on, guys? Welcome to my trade review on OPAD, OPAD Solutions Incorporated. Took this trade on September 16th, 2021. And let's go ahead and just jump right on into this review. I've gone ahead and mapped out some support and resistance levels. Obviously, these weren't in on my chart in the first thing in the morning, but this one was. This $16.10 is a really important level. Obviously, it's the top wick of this rejection candle, this failed breakout candle. So that's a really important level, and a level that I was hoping to see hold off the bell, which it didn't do. And when we jump into the intraday chart, we can take a look at that in a sec. But that was an important level. So with that being said, let's jump into the actual chart itself, and let's turn on the pre-market from this morning. So, as you can see on this pre-market chart, this 1610 wound up holding support in the pre-market right there and right there. So 1610 obviously looked like a pretty juicy level to hold support, and that's what I was looking for off the bell. So, I'm going to go ahead and take off my pre-market data now, and we're going to jump into the actual trade itself. Okay, so this morning, off the bell, we get these nasty sell-off candles. And, I actually wasn't in this, I wasn't looking at this thing. It was on one of my charts that I was watching, but I wasn't actually actively scrutinizing this thing off the bell. I was actually in BBIG for a small trade on that one. I got a little 5% gain on that one. So that being said, where this thing started to pique my interest was the fact that it was kind of consolidating and we were creating this uptrend support level, but really right here where we got through VWAP on an increase in volume here is a VWAP trade line cross. Is one of my favorite setups to trade, aside from the one that is set up above. That is the one I traded. This is a great setup to trade. And what you really want to see when this happens is a sharp increase in share price and an increase in volume over the VWAP, and then we get this nice follow through with the EMA acting as a support through as it crosses over the VWAP. So the beautiful 45-degree angle on that as it's crossing the VWAP. The pullback into that is where you'd want to go ahead and get long in front of the initial morning high right here, and then ride the support level up, and then you would probably take profits here in front of this initial morning high here. That's the move, and then you get the extension follow through. But I didn't catch that part of it. That would have been super nice in hindsight if I had paid more attention to this and less on BBIG. I probably would have been able to capitalize a little bit more percentage gain on this. This was a quick rundown. This was a 15.5% gain from my entry to my exits. So it was a nice trade. I made a nice profit on this, but unfortunately, not as much as I probably would have wanted it to be. But that's the game. That's how things go. So where I started to get obviously ready for the entry was as we broke through this initial morning high on this really nice increase in volume, low volume pullback into support. That's the beauty. That's the move I'm looking for. My entry was, as you can see at this green line, $17.77. So that's the first thing. So what you want to do when this stock makes that move is you want to draw out the fibs and pull those fibs up to the high of the day. So that high being $19.60. So as we pulled back on this low volume, I went ahead and got long at $17.77 with a stop loss at $16.50. So right about there, just kind of right at the top of these wicks. So 1650 is obviously for me an important stop loss level because it's below the initial morning high right here. Again, that's a very important level. So slightly below that initial morning high, and also we have the 38.2 Fibonacci level that lines up perfectly with the initial morning high. And then we have VWAP and the trade line, a little below it, not ideally right at it where I would love to have seen it sit, but nonetheless it's right there. So went ahead, got long, stop loss there. Getting a little concerned as we pulled into that level, but this is why I was feeling pretty confident that this was going to work out. The volume was low on this pullback as it continued to consolidate and retest this initial morning high level. It's exactly what you want to see. You would not want to see a candle like this as we approached and breached through that level. That is, to me, is game over. This setup has failed. Time to probably get ready to take an exit, but it didn't happen. Initial morning high and that 38.2 Fibonacci level was enough of a confirmation for me from a technical indicators perspective to feel pretty comfortable that this trade was going to work out. But the important lesson about this trade, I'm just going to zoom over a little bit. The important lesson about this trade is the time in which it took place. Really important to note that this setup started to occur and the trade, the inflection point in which I assumed this trade was going to get its breakout was exactly during lunch hours. And unfortunately, that is not the best time to have that breakout. That being said, the reason being is because there are just less people trading the stock. There's less people sitting at their trade desks actively looking at this stock, so there's less volume, there's less volatility, and ultimately the follow through, the percentage of follow through is less. So, if this was at 10:30 in the morning, this would have been an A+ setup all day, every day. I would trade this regardless of whether it was during lunch or not, because it's definitely a high probability setup. But from a time frame perspective, not the best time to have this happen. So unfortunately, it was lunch and it was what it was. That's okay. I'm gonna do my best to take my profits and lock in my gains when I see the opportunity. So that's what I did. As we started to get this uptrend and the volume started to pick up, the EMA started to act as a nice level of support. And as we broke through the downtrend of the flag portion of the setup, I set a sell limit order up here at $19.25. I was hoping that $19.25 was going to be the ideal level because it was right in front of this new high here. You always want to take off profits in front of the previous high, because if we don't have enough volume to break through and it does fail, at least it's essentially like a risk mitigation strategy. You're taking a little bit more off, or you're taking a portion of your shares off the table to limit the risk to your downside. That's always what we're thinking about, guys, is downside risk. How much money I'm going to lose on this trade. I'm not really worried about, I am worried about it, but I'm not really too focused on how much I can make, because we don't know this. This is an unknown, especially on a stock like OPAD where we have no overhead resistance. We are in uncharted territories. We're at new all-time highs on this stock. So these are all little things you have to think about. And then also really important to take note, and another lesson on this trade is the importance of setting a sell limit order ahead of the time in which you want to take profit. If you're going to take profit as the stock's moving up and you don't have an order out in a stock like this where you have a 10-cent spread, you have extreme volatility, 2 million share candles, blowing off, it's really important. You're going to miss your opportunity to take profit if you don't have the order sitting out there for somebody else to take, so for that transaction to occur. So really important lesson, set your sell limit orders on the way up. Now I'm going to talk about on the way down, because we did get a pretty nasty downside move, but I'll get there in a second. So my first profit was ideally $19.25. I didn't see this happening on this candle, so I readjusted that limit order to $19.10, and I got filled on that on this candle here. So I was really happy to take off on this candle. I took off 50% of my position, and the reason I did that was just overall market volatility, time of day, the SPY, the Qs, all the major indices just kind of acting really wacky the last week. Normally I would probably take 25% off at the high of the day, or in front of the high of the day, but because of all those factors and lunchtime and all that stuff, I decided to play it safe, do 50%. So that's what I did here. 19.10, first take profit, 50%. Looking for a pullback to hold, and really what I wanted to see was stay out of this flag. That's it. It's plain and simple. If we continued down and broke back into the flag and then down through the bottom of the flag, that to me is a sign of weakness, that the setup itself has failed and it's time to get out. I'm not going to stick around and hope that we get a bounce. I'm just going to take an exit and re-enter again later if I see an opportunity again. But protecting your downside risk, this is the game. Protect your capital. That's it. So we held, we consolidated for a few minutes here, and then we did get some continuation. So I went ahead and set my next sell limit order for on a whole number. So I went with $20.50. I felt like if we broke through this $19.60 area, the round numbers are going to, because we're in uncharted territories, the round numbers 20, 50, 21, 20, 150, 22, those are going to be probably very obvious areas that other traders are going to want to take profits at. So you can do, one strategy is to do, drop yourself down a couple cents from that whole number. So if 2050 is your ideal profit take target, do 2048, 2047. That way you're more guaranteed to get the fill. So anyways, I went with the round number on this move, and I actually wound up top ticking this candle here. And then really what we were looking for was a breakthrough and a low volume pullback and a consolidation. And this is where reading volume is really important to understanding the heartbeat of the stock and how things are going to progress as you stay in the trade a little longer. And when you start to see a stock pull back and then make an attempt to break through this level on this type of volume, that is to me a sign of weakness, a sign of momentum is kind of tapering off a little bit. And I wasn't feeling like very confident that we would get more upside. We already made this nice move. This was almost a 15.5% move out of the flag from my entry. So, it's a pretty decent profit. I was hoping for some more, but this is the challenge of lunchtime trades. It never, there's never any guarantee. I think the probability is 10% less, at least, that there will not be further continuation. Going back to the morning session, if this thing was strong in the morning and then strong in the lunchtime session, the odds that we're going to get a follow through in the afternoon session, to even higher levels, is less. So really what, this could hopefully, I was maybe actually hoping that this was going to happen, is just a consolidation through lunch and then the breakout to the upside. Maybe we could have gotten up to that $22 area, but that's not the way this panned out. So the next part of this lesson, and I'm going to talk about really quickly, is the rest of the 25%. So I took 50% here, 25% here, have a 25% left to see what happens. So now I'm pretty comfortable. I am not sweating any big moves, to the downside, but I did have a stop order or stop area for $19.50, 1950. 1950 was just below this level here, just below the highs here at $19.60, kind of like around the tops of the body of this candle. And I was really hoping to see it hold that 1950, consolidate through the rest of lunch, and then we get that upside action, but that didn't happen. We actually got this nasty wick down. That was almost a 10% drop or so. And the importance here, this is the lesson, guys. On the way down, if you're going to set a stop order, do not, I repeat, do not use a stop limit order. Make sure you're using stop market orders. The reason for that, if you have a stop limit order set for $19.30, let's say that was my order, 19.30 stop limit, this thing does this and drops through that level, probably not going to get filled on that. Probably a low probability I'm going to get filled on that, because it's looking for that. It's your order, the market maker and the order and the broker is looking for that very specific price, that $19.30. If it goes too fast through that level, you're not going to get filled. So you need to use a stop market order. Market orders guarantee you the best possible fill for what your order is. So if my order was $19.30, given that there's probably going to be a little bit of slippage with that on a nasty wick down candle, I got filled at $19.29, so it was a penny below. Sometimes I get filled a couple pennies below, but I would rather get filled 2 pennies below, 3 pennies below, than get filled all the way down here, or miss my order and then be sweating this. This thing halted on the way down. So if I was stuck in this and with a bigger position size, or I hadn't taken any profit, assuming that this thing was going to continue, it looked like it kind of wanted to flag here a little bit and go this way. Well, it didn't. and then this would have been a winning trade turning into a losing trade, and that is not what you want to happen. I've been there so many times, guys. I've lost so many trades because I was trying to be greedy or trying to be hopeful. The name of the game is just to get your profits into the bank account. Just get them into your trading account. Don't worry about the upside. Worry more about the downside. That's what the name of the game is. It's all about risk management, position sizing yourself correctly so that you're gonna lose the same amount of money on every trade, and it's not going to have that wild P&L swing. So position sizing is really important. Something that you guys should all be doing. It should always be a dollar amount that you're willing to lose, not a percentage of your account size that you're willing to lose. Because as you can see, stocks need room to breathe. If I was going to trade with a 1% stop loss or a 1.5% stop loss or a 2% stop loss, I probably would have been stopped out in this trade right here, right below my entry. This thing needed the room. It needed the space. I can't nail, you don't know if this thing's going to drop down exactly to this level, so you can get long here and have that little that tight little stop loss, which may happen from sometimes, from time to time, but it's not a guarantee. So position size, use that dollar amount, get comfortable taking profits on the way up. Really important to do that so you're comfortable in the trade. Stocks like this has a 58 million share float, and this thing was just whipping around like crazy today. It's making dollar moves in minutes. So you have to be okay and be able to stomach that type of volatility. If you can't, then you can't really trade these stocks. If you have no risk management, you shouldn't be trading these stocks. So that being said, the rest of the day we did get this pullback to the 1610 level. This thing, I'm just going to scroll over to the right a little bit more. So 1610 wound up being a great support level, and it was that high from, if go back to the daily, is this level here, this wick high, the high of this wick candle here, and back to my 3-minute chart, and then we did get this bounce off this area, and this is kind of where I think the shorts piled in and got stuck. If I was short bias and I saw this happen, I probably would have gotten short right around here with maybe a stop loss up around that 1660 or maybe the high of the day, depends. So getting short, maybe take some profits, maybe re-short it here and then drop it down. Oh, this is looking juicy as a short for more downside, but look at the volume on this pullback here. Just from a short bias perspective, that's not enough. You want to see this. You want to see this as we approach these support levels, which are resistance to the short side. So it just never happened, and then the shorts I think got stuck here, and they started to cover, and then hopefully they were probably gonna try and push it back down, which they tried to a couple of times at the end of the day, and that didn't happen. We got this this push back up to test the high of the day at what level is this? This is $20.87. So think about it. If you were short here, you got short here and using the high of the day, and then this happened in the afternoon, increasing volume. So each subsequent push up was on an increase in volume, low volume pullback. High volume push, low volume except for here, low volume pullbacks, and then this high volume push at the end of the day. So if you were short, how comfortable would you be holding this into the close and then into the after hours? That's squeeze central. Like you're gonna get totally annihilated, and you're not gonna manage yourself too well emotionally and with your actual bank capital and your mental capital if this happens, and then infinitely your losses go up and up and up. And this thing hit just over $22 in the after hours. So we did squeeze some shorts, and we are up in no man's land. So who knows? Like it's a big risk for them to hold. So as you can imagine, if you were short, you'd probably want to cover at the end of the day. And it's really important to see, if you have a strong move, this is another little lesson here. If you have a strong move and VWAP comes into play and the shorts are unable to break VWAP towards the end of the trading session, chances are you're probably going to potentially get a short squeeze into the after hours. If you get a move like this at the end of the day where it does push up, and that is what happened. Let's turn on my after hours data, and then got this push up to $16.64. Also, I think what's kind of funny is I noticed later on in the day, 38.2 fib lines up almost like dead perfectly with my entry. How about that? Who knew? So that's kind of funny. Anyways, for tomorrow, potentially looking for some follow through here. Hopefully 17 holds as support maybe, and then we get a retest of this $22 area, and then maybe more upside. Who knows? Hard to say. Obviously, we don't know. We'll see what happens in the morning's trading session. So I hope you guys found the information I shared with you and the little lessons that I've shared with you helpful. If you did, throw me a like and maybe a follow on my YouTube page here. Check me out on Twitter, Jeremy Shaw at the Bull Jew is my Twitter handle. And if you guys find this helpful and you want to stick around for some more in the future, I'll try and post these every day, good or bad. Good, bad, and the ugly. I don't care if I win or lose. It's helpful for me. It's helpful for you. So let's share. Let's get better as traders together and help each other out. And that's my goal here, guys, is to just share some of my experiences with you guys and hope that you learn. Whether it's good, bad, I always find doing these video reviews very helpful for me in a kind of cathartic sense where I can kind of subjectively look at my trade and see where my strengths are, where my weaknesses are. You should be doing this along with journaling your trades if you take it seriously, reviewing your trades, spending time looking at what you did and how you can improve and where your mistakes are is only going to improve your skill set as a trader. And it's taken me a few years to get there myself, and I'm still learning every day. I'm forever a student of the market, as my mentor says, and that's just the way it is. Always learning. So I hope you guys found this useful and helpful, and stick around for future reviews. Appreciate it. Appreciate the love, and I hope you guys have a great night, and I'll see you on the next one.